Hey guys, hope you're doing well out there. If you own shares of Tesla, you're probably feeling the pain just a little bit in the after hours as you have shares declining by more than 8.25%. That's despite shares declining by roughly 2% in the regular trade. So we'll go through their Q2 print, which came out after the bell. But as we always know with Tesla, it's all about what the future holds for this company, while the past still does matter to some extent, and we'll go over the revenues and the earnings, cash flows, all the important things. It's all about what is projected into the next couple of quarters. We'll then also take a look at the Tesla earnings call, and the all-important Elon Musk went on to make some comments that I'd say sent shares down a bit more lower in the after hours. We'll take a look at some news coming out of Tesla and then take a look at the stock chart, as this one is once again headed back in this downtrend, breaking through this resistance line that we had broken through, and you can probably expect some more downside with shares of Tesla. We'll highlight some levels where this one could level out and where you can pick it up on a rebound. As always, if you're new to the channel, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Tesla, despite declining 8% over the past 1 year, you're roughly flat year to date. You have seen a significant rally really over the course of July. But keep in mind, you're now once again extended on a valuation. You're trading close to 100 times a forward earnings multiple. Even from a free cash flow yield, you're probably very, very small, less than 0.5%, I'd say, in terms of a free cash flow yield. So despite this basically no performance year to date, you still trade extremely rich from a valuation, and that I think continues to put downward pressure on the stock really anytime it seems to break out. Now, you had revenues come in at $25.5 billion for the last quarter. That was growth of 2.3% year over year. So while that would look pretty terrible on the surface, consider the fact that that did beat Wall Street estimates by 760 million, as Wall Street actually anticipated Tesla revenues to be declining by 0.75%. When you come in with growth of 2.3%, yeah, I think any growth was better than feared over at Tesla. Now, bottom line non-GAAP EPS came in at 52 cents. That did miss estimates by right around 10 cents. So on the bottom line, Tesla does disappoint. They were expecting 31% negative growth on that bottom line. Tesla coming in closer to 43% negative growth on that non-GAAP EPS. And really on this news, shares were down initially by right around 1%, but what sent shares lower was the conference call, as you had Elon Musk get on that conference call and pretty much say the things that investors did not want to hear, at least when it comes to Tesla's near-term future. Now, we'll get to the conference call in just a second, but let's first take a look at the outlook provided by this company on the, again, right before the conference call on the press release. They say in 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. And if you really have kept up with Tesla throughout 2023, you know the vehicle volume growth has been anything but stellar, and so they anticipate even further slowdown at the end of 2023. Pardon me, at the end of 2024. And then as their team works to launch the next-gen vehicle and other products in 2024, the growth rates of energy storage and deployments continue to really outpace the automotive business. And we'll see that from their financials, the energy generation and storage business really booming over at Tesla, while the automotive business takes a back seat. In terms of profit, they do expect hardware-related profits to be accompanied by an acceleration in AI software and fleet-based profits. We're still, I'd say, a ways away from at least recognizing or realizing that in terms of the financials. And then on the product roadmap, they remain on track to start the production in the first half of 2025. These vehicles will utilize the next-gen platform, but will remain to be produced on the same manufacturing lines as the current vehicle lineup. And so that will sort of allow them to have cost reductions and basically less capex into new manufacturing lines. So still, I'd say ways away from that in 2025. At least they say they remain on track and production isn't expected to get pushed out. And they remain, I'd say, to deliver those vehicles somewhere in the mid of 2025. Now, as we come ahead and look ahead to the next few quarters over at Tesla, really the pain is supposed to subside by year end. You only really have a couple more tough quarters over at Tesla before you once again get back to really strong growth. Now, keep in mind that growth is coming off some pretty terrible comps, so it's not like the growth Tesla once had. But as we get through this time period of really high interest rates and maybe eventually get to a point where rates tend to at least trickle down lower, this company will have a brighter future in terms of that EV demand, which still continues to make up nearly 80% of their top line revenues. The automotive business is still the bread and butter over at Tesla. And once you see a tick back up in revenues, you also see a tick back up in earnings. And I think automotive revenues is what drives that, and really demand is what will drive those automotive revenues higher. Now, the Tesla earnings call did cause a shakeup in the stock in the after hours, and that really sent shares lower, I'd say by a majority of this 8.5% decline. Now, on the conference call, you had Elon Musk come out and try his best to really pump the stock, keep it afloat, but I'd say he couldn't even do that, as he talked about the robotaxi delay, he talked about the energy upside, the discounting downside, and he also name dropped Nvidia during the conference call. And so let's start off with basically the bread and butter of Tesla, which remains the automotive business, and he continues to see discounting in the EV sector, and that clearly has made it difficult for Tesla in the past, but he only thinks it will be a near-term issue. And as we saw from the earnings and from the revenue expectations, that issue, I'd say, is expected to last another 2 quarters into Q3 and Q4, and then beyond that. Certainly the expectation is that the EV sector sees a pick back up in demand, and those average selling prices can continue to be increased instead of lowered. He then also said they are still on track to deliver an affordable model in the first half of next year. That I think goes in alongside their outlook to have production for the first half of 2025 for that more affordable model. Elon also said that autonomous driving will be a massive demand driver. I think this sort of just fluff words by Elon at this point, at least, because we don't see that meaningfully be delivered in their financials. The robotaxi event, which is now rescheduled for October 10th, so initially I think it was scheduled for sometime in early August, I believe August 8th, but now that's been pushed back to October 10th, and so that robotaxi delay I think helped some other shares like Uber and Lyft. But Elon said mainly that will allow the company to add a few things for the product unveil, and so we'll certainly be here on the channel to cover that, and I guess we'll just have to wait and find out what that robotaxi unveil really looks like. He also highlighted the Optimus humanoid robot really breakthrough, that they will have that in production next year, and even in this most recent press release they had a photo of sort of that humanoid robot Optimus handling battery cells, and at least in their own factories, while they are doing just basic tasks at this point. Still impressive, the fact that they have these Optimus robots out in production, at least on their own manufacturing lines so early on. And he says that the Optimus robots will be performing important tasks for the company in 2025, and then the second version of them to be sold to outside companies in 2026. I think mainly you have some large robotics companies, probably Amazon could be one that could be looking to pick up some of these, someone like a Walmart, maybe large grocery stores. Certainly these humanoid robots won't be cheap, and so there's not many companies out there that can probably actually even afford them until at least the price point for them comes down. It's probably easier to pay a worker, at least at the current time. Regarding the energy business, Musk said that Tesla is ramping up as fast as possible, and then he closed his opening comments by saying the importance of autonomy should not be underestimated. And again, something I think he has to say, at least for now, in order to keep investors excited about the future of autonomy and full self-driving. And look, while it certainly looks to be promising, I think you're still a ways away in order to have that rolled out in mass, really across North America, across the United States, and then certainly across worldwide. You have just such a large delta between developing it and then full adoption of that technology that I think there's a lot of time that needs to play out before that really reflects in the company and especially in their financials. Now, as we head to the Q&A session, Musk was impressed by the NVIDIA GPU clusters. I think impressed is certainly an understatement. I'm sure there's at least some reason why those NVIDIA GPUs are flying off shelves, but he still wants Tesla to develop the Dojo supercomputer. And again, it's something that's down the ways that I think Tesla could maybe see a ROI on, but at least in the near term, they will continue to heavily rely on those NVIDIA GPUs and probably can't replace them just as easily as really Elon makes it seem. Now, he also says that Tesla is putting on hold plans for the Gigafactory that was expected to open up in Mexico, and that is due to the US election and potential for tariffs if former President Trump is once again re-elected into the office. And certainly, at least until last week, it seemed like it was his election to lose, but we have to, I guess, wait and watch at this point. But I think the delay, or at least the pause in the Gigafactory Mexico plans, certainly actually impactful to the production of probably their next generation vehicles, maybe to some Cybertrucks. And I guess we'll have to wait and see until when this Gigafactory Mexico comes back into production. And so overall, this conference call, I think, was a classic Elon Musk conference call. He doesn't really talk about the most recent quarter, just sort of blaming it on the near-term difficulties in terms of the EV sector and saying that it's a near-term issue, and then really focusing on the next, I'd say, 5 years over at Tesla, focusing on the humanoid robot, focusing on robotaxi, on autonomy, on the Dojo supercomputer, things like that. And so I think you still have an Elon Musk that is looking far out ahead, hoping to keep investors really intact within the stock over the rosy outlook over the next couple of years, but a tough outlook, I'd say, over the next couple of quarters. And like we said, the Optimus robot in production, at least performing some tasks, but expected to perform meaningful tasks later in 2025. Now, from their financials, it looks quite ugly, to be honest. You have automotive revenues down 7%. Look, still making up the vast majority of Tesla's business at $19.8 billion. But what you do see is a extremely nice pickup in energy generation and storage along with their services, as you have energy generation coming at $3 billion, up 100% year over year, and then the services revenue coming at $2.6 billion, up 21% year over year. And so despite your automotive revenues declining 7%, that really allowed your total revenues to remain afloat, up just 2% year over year. And so your automotive revenues also now making up a smaller percentage of the overall revenues, really taking away some risk from a pure auto company. In terms of expenses, those weren't really able to be controlled as well, as you had operating expenses come up to $2.9 billion. That was up 39% year over year. We'll take a look. Some of that is due to some restructuring charges, and that really allowed your operating margins to continue to sink. Now, what you notice is year over year, yeah, they're still down, but quarter over quarter, you did see a tick back from 5.5% up to 6.3% in those operating margins. So was the last or the previous Q1 the bottom over at Tesla? Certainly it looks like it from a revenue perspective, looks like it from an operating margin perspective, also looks like it from a net income perspective, as you once again had sequential increase in your net income. And while year over year you're still declining, again sequentially, maybe Q1 of this year was in fact the bottom, at least in terms of their financials. Now we'll take a look at the cash flows. This company continues to be pretty healthy, at least from a cash flow perspective, but they continue to spend just an absolute boatload in terms of the capex on their AI build out. Now, from a balance sheet perspective, some things to actually like here. We see a $30.7 billion cash equivalent and investment figure. That is the largest it has been over the past 5 quarters. What we also like to see is the inventory line actually ticking down on a sequential basis. So last quarter we had 16 billion sitting in inventory, and that now ticked down to 14.2 billion. And I think that inventory tick down is really what allowed them to bolster on a little bit more cash flows. I think, again, this shows another data point highlighting why Q1 of this year might have been actually the bottom in terms of Tesla's business, considering the fact that sequentially you are seeing a decline in your inventory buildup. And again, Q1 you had 16 days of days sales, but now you're down to, once again, 14 days, which still is up year over year, but not nearly as much as you were up in just Q1 of this year. In terms of liabilities, all things looking fairly in line. They did take on a little bit of long-term debt, as you see. Current portion of debt coming up from 1.5 billion up to 2.2 billion year over year, and then remaining debt and finance leases coming in at $5.5 billion. Last year, you were right around $800 million. So this company did take on a little bit more debt. We see that also from their cash flow statement, as you have 3.6 billion in operating cash flows. You spend roughly 2.27 in capex, again on the build out of that AI hardware, probably some of that in the Dojo supercomputer, also in Optimus, and then the remaining sort of flow into the purchase of investments and securities. But what we see is they took out roughly $2.5 billion in terms of debt financing, and that really allowed them to have that $2.8 billion increase in their net cash and cash equivalent. So I think this company taking on a little bit of debt probably just for the next couple of quarters, but like we said, all things from the financial statements show that this company really having a tough time, but maybe the bottom was in the March quarter. And while the next 2 quarters remain tough over at Tesla, I think the future probably looks brighter than at least the past has. And I think that's what this rebound in the stock has shown, as we got delivery numbers early in July that really caused the stock to race up to $270 in a hurry. We're now once again seeing a pullback underneath this resistance line, really, which was a downtrend that started back in November of 2021, where we made our all-time highs north of $400 a share. And so now we're once again piercing through this line through a big red candle, which likely will stay tomorrow. You'll probably gap down and then open somewhere underneath $230. And look, if you expect shares of Tesla to continue to head lower, the first level of support is probably sitting right here smack dab at $200 a share. So I wouldn't expect a level of support for Tesla really until it gets to this 200. And I think if the selling pressure really materializes in this week, you can probably expect this one to continue to head lower in the near term. Now, if it sees support at $200, that could be a level where if you wanted to, you could step in. From a near term, it could act as a level of support, considering you've made a set of lows, higher lows, and then that could be a third level of higher lows. Certainly, I wouldn't be overly aggressive in order to step in close to this $200 level. You could continue to just pierce through it and head lower. Certainly from a valuation perspective, you're not supported even at these $200, $180 level. You're probably headed much lower. And I'd say the bottom level support is right here back at close to $155, $150 a share. And so certainly I could see Tesla retracing all the way back down here. The news would absolutely have to get ugly. I think the robotaxi event disappointing would certainly send shares back down to the 150s. I think what could have shares rebound near this $200 level is if you have that robotaxi event, certainly surprising to the upside. That doesn't come until October, so you're still a couple of months away, but it is before their next earnings release. And so I think until then, you continue to tread water somewhere in this $200 range. And if you do really want to pick up shares in Tesla, I think your first level is at this support where you've sort of bounced off in the past, close to 200 up to maybe $210. Until then, I certainly wouldn't step in tomorrow to catch this falling knife. I think you have a little bit more downside in shares of Tesla, and I would protect some downside risk. Maybe if you want to set a stop loss right here at 195, call it, you're probably protected in case shares head down once again into the 150s. I think the long-term story with Tesla remains really as it always has been. You're focused on the Optimus story as long with the autonomy and robotaxi story, and I think that's what drives you to hold the stock into the near future, at least into the next couple of years. But in the near term, I think you still have another 2 quarters of pretty difficult comps for Tesla. And as you head into Q1 of next year, once the election cycle is also over, and then perhaps once we see that rate cut cycle begin to really materialize, I think that's when you once again have shares of Tesla rebound. So you're still probably a couple of quarters away in order for that to happen. Let me know your thoughts on this one in the comment section below. I think it's continuing to be a fine hold if you are a long-term investor. If you are a short-term trader, probably one that continues to head lower in the next couple of weeks. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.